Happy Tuesday. Hey, Rodney, how are you?
I'm good, Andy. How are you?
I'm peachy. No pressure at all, right? I mean, it's just show day, and here we are looking at each other through the internet, the
That's it.
interweb.
Thank you for the memo with the black shirt. We need to do this more often.
We do. Mine's actually forest green, but we'll work on the color thing later. did Did you have a good Labor Day?
Oh, it was awesome. Got
Did
to celebrate with my oldest son come in from UT. He's a junior at UT. We came in, got a little dove hunting in on the first, and then played golf the weekend with my other son. So we had a great time.
That's good. And you had, if it, I don't know much about it, but you're pretty low handicapper, right?
Yes.
I've heard we've got mutual friends, and somebody said you don't want to bet Rodney on the course.
I try to take people's money. I mean, that's the goal.
Hey,
But
you have to
it's a
have a
big
goal.
circle. It just comes and goes.
Circle of life. Hey, for anybody that's new, I'm glad that you're here. For anybody that's been here before, welcome back. We're always glad to see you. My name is Andy Elliott, realtor here in Williamson County, Tennessee, and I am with my good friend Rodney Wilds with First Trust Mortgage. He's a loan originator, manager. He's the king of the world up on that end of the world, also in Williamson County. Our goal on this channel is pretty simple: to provide information and value to you. If you have questions, comments, or any kind of concerns at all about what you're doing, give us a call, send us a text, shoot us an email. All that information will be in the description box or the comments section shortly after the show. So I think we got that covered. I want to make it real. Hey, Angie, how are you? Hello to California. She's our Philip, Mr. Thirst. Good afternoon. Yes, it's a good afternoon for you and me, and it's morning for Angie. So we've got all the time zones covered, almost.
That's it. Yes, we need somebody from East.
We need the East Coaster. I wanted to make it's not a huge announcement, but I wanted to keep things up to date. I'm going to update us on our format. It's always evolving, and I really appreciate your flexibility as we go through this, trying to streamline what it is that Rodney and I do on here on Dollars and Cents, and understand that I just want to remind everybody that let me click. I got it. This is risky. I'm going to take CPUs here. Come on, there you go. We're good. This is a call-in show. So if you have a call-in, and there's the number for you right there in case you need to see that, need to be reminded, we're going to make some calls here. So you can call us now, and we'll talk, not right away. Let us get through the front part. But as we go through this format change, what we're going to do is the intro, just like what we just did. We're going to touch on the rates because everybody wants to know those numbers, and there's a lot been going on, and that's Rodney's strength. He's got all that figured out. Then we're going to get to our fast answers, which is what this is called now. It's called fast answers. And we're going to go through that topic. And then after that, after we're done with that, we'll either take calls, answer questions, or cover other topics that Rodney and I kind of catches our eye. If something's interesting. I mean, the whole point is your fast answers, other than my blabbing on right now, the fast answers is up front for you to get whatever information that you're after. But then that doesn't mean that we can't continue to chat afterwards because we always have fun. So hopefully that made sense. Are we ready for anything to add there, Rodney? I kind of steamrolled you there.
No, it's all good. I like it. We're ever changing, but what stays the same, don't you?
Yeah. What?
We're going to talk about rates.
Let's do that. Well played.
I'm a master.
Here we go with it.
All right.
Bang, ding.
Well, again, this morning we'll start at the top of the sheet here and look at we're 35 basis points down this morning. U.S. Treasuries up 8. Like I said, red is bad for mortgage rates. And you can see, though, we have started to see here since about the 22nd of August, we have started seeing an improvement all the way up to the last couple of days. And really today is the most significant. You could see yesterday wasn't, that was actually September 1st there. So today's opened up a little bit worse. Um, Hoping to see this trend continue. Not sure why they're as high as they are. There's really not a lot of technical data saying that they should be this high, but they are. So that is it. Hopefully, we'll see some more continued improvement and get back to where they're really good.
Good. I'm looking forward to that. If I'm not mistaken, the sorry, the rates really bounced last week, didn't they? I mean, they went sky high for a minute, then dropped back to 709, and now they're 7.2 or something like that. Is that reasonably close?
Yeah, I didn't see them bounce. You can see in that chart there, they just kind of went high, and they went high, and then they're starting to come back a little bit now from the highest
Okay.
mark.
Yeah, by bounce, all I meant is they're all over the place. So
Yeah,
that's it. That's it for rates. And so what I read was somebody said, "Well, things are uncertain. We'll have a better picture in September when Jerry starts sharing his thoughts on the numbers." Jerome Powell. So let's get into fast answers. What do you think, huh?
Let's do it.
How can you not like that guitar picking? So today's topic is how to get pre-approved for a loan step by step. This is Rodney's deal.
Let's do it. Choose a lender. And this we could actually probably do a whole topic on choosing a lender. But the first thing you want to do is find somebody you can work with, and we can go into detail at a different time, or call us about the best ways to shop for a lender. But when I'll give you a couple tips. One, you got to just shop on the same day when you're talking to somebody, because rates like today, you've seen that 30-something basis points move we just showed earlier this morning. So if you'd asked me yesterday, and then asked somebody today what their rates were, and we were dead even, I would have gave you a better rate last week than I would have today, because the market opened up like that. So when you're when you're shopping for lenders, shop the same day. Make sure you're getting the rates and fees from the same day. So tip number one, choose a lender. And there's a lot to go in there, but that's step number one. You got to find somebody that's going to work with you.
I've got to ask a question on that. So you said the same day. Now, I bet you that happens more often than we think, that somebody is going to shop for a loan this week. And during the course of the week, you can get numbers that don't truly represent the competition one from the other if you're checking on different days.
Exactly. And you don't need to give like if somebody calls in, you can get a rate without an application, right? You can say, okay, this is what I think my credit score is. We can go through some details, and you can get a quote that's good enough to shop against, right? That you can say, okay, these are this lender's fees, and this is this lender's fees, and today this is their rate, and then today this is the other person's rate. But just for that example, as you've seen, our rates got worse this morning from last Friday.
Right.
So if somebody's like, hey, I'm getting out of the office early Friday, I only called one lender, and then they call the new lender on Monday, they're probably going to go back to that first lender thinking they're the best, only because they had the better, the rates already moved by the time they asked the second lender.
That's interesting. You've told me that before. I think it was long time ago, but that's a great opening comment. So great.
Second thing is very just self-explanatory. Gather personal and financial documents, your pay stub, your 401k statements, or whatever you have. the ways that you get documents and the ways that you have your money and save your money, those are the documents that we're going to need. Now, most people have access to them online and things like that. We can go in onto our bank accounts or other accounts and pull up the account statements, and that's totally fine. So as long as you've got your passwords and everything updated and you can get that information, that's what you're going to need. And be thorough too. It's get your you're going to need most time you may need some tax returns, W-2s, things like that, just depend on how you get paid.
Can I add a thought on that I always share with buyers, with new buyers?
100%.
I'm going to say there's two types of people. There's certainly more than that. But there's those that are really organized, and then there's people like me that's not terribly organized. I have all the stuff, but I don't have them in nested folders all perfectly aligned so that I could find it for you in 33 seconds. For a lot of new time or first time buyers, or any buyers really, as you're getting ready to go through the process, if you're not the organized person, what I suggest is put everything that you need as you discover things into a single file in one place on your computer. Because ultimately, as you go through the process, as you've sifted and sorted and gathered all these different documents, somebody's going to ask you for a document you're sure that you've given them before. Maybe you have, maybe you haven't, but a new set of hands needs to look at it. One folder for all the stuff. You can break it down however you want in that, but my suggestion is one folder for everything in the beginning.
That's a good suggestion. It's and I don't want to date myself, but a long time ago, when people that were extremely organized, like you were talking about, they would bring, and applying for a loan, they would bring in a folder, like a 3-ring binder with these documents actually printed out and things. Now, today's a different world. I would be like, hey, let's not use a binder for that, right? You can tax, everybody gets this stuff digital now. So like you said, that digital folder is as good as a 3-ring binder, and it's really good makes the process for the customer extremely smooth.
Yeah, because sometimes somebody will ask you for a document, and I've had this. This is the only reason I can share this. Sometimes somebody will, a lender or somebody will ask for a document for a new buyer, and they're already under stress. I can't find that file. Andy, did I send that to you? It stresses them out. One file, one place to go, is going to help you.
Now, I'll give a shout out to ourselves here. We've got a portal that. When you upload your documents, it just stays in there and everybody can see it. Nice. So our portal is kind of our folder. They can save the stuff in there, and it's always in there for the portal. It's an app for the buyer, and you can see everything you've always uploaded to. So
perfect.
Good point, Andy. Check your credit score. If you tuned in to some of our earlier podcasts, you've seen that this went to number 1 on my list before when you're doing something to get pre-approved or when you're going through the process the first time or again. You've got to start looking at your credit score. Credit scores mean more now than they ever have in the lending process, and they affect your rate more than they ever have during this process. So it is a critical time for if you're entering into the purchase let's start looking at your credit. Now, you can either do that by a couple ways. We can either do that with your lender partner, right? You can come to me like somebody says, okay, hey, I want to get this process started. We obviously know I need to look at this credit immediately. And if there's some tips, we're going to try to give those tips while we got time to work on them. If not, there's a lot of free credit, like freecreditreport.com. Just check out somewhere with the credit reporting agencies that you can get your credit score and take a look at it, even if it's just one. Okay. So that's the thing about credit score is to me has become the number one thing you need to look at when you're getting approved, just because your rate it means more now than it ever has. And especially with rates being a little bit higher, we need every advantage we can get to keep a lower rate. Andy, got anything to add on credit score?
Nothing. I would ask the question: when you're looking at Credit Karma and you're looking at Wallet Hub and all these different ones, are they pretty reliable?
They're always going to be different than your tri-merged, because we're going to use the middle score, not the average, the middle out of the 3 credit bureaus.
Right.
So they're only going to see one of them. So no, it is accurate. But what I'm most concerned about is, like, is there something on there that you didn't know about? Is there something on there that we can do to help your score, and things like that? Because it's no longer, oh, I found this, it popped up on my credit report, and it's not going to affect my score. Or it's not going to affect the deal that I get. It's going to hurt the score and then hurt the rate too. So,
I think that probably the biggest lesson would be that when we're talking about checking your credit score, the difference between a 770 and a 772 is no big deal. You're talking about ranges, correct?
right. The last LL loan level pricing adjustment that we talked about pretty extensively. It created a new credit bracket. Like 740 used to be our top bracket. Okay, now it goes all the way to 780, and it's going in 20 point increments. So it goes 740 to 760, 760 to 780. So it created 2 new brackets above the 740 and had lowered all the other ones. So a 700 used to get, 2 brackets from the top. Now it's 4 or 5 or whatever it is, right?
Got it.
So that's the difference.
Okay, I just didn't want people to get too granular about the credit score. Okay.
Yes, it's every 10 points is usually get you a better. Go through the pre-approval process. That's it. Basically applying and getting a lender to review your pay stubs, your income statements, the assets, to go through the pretty much as much as they can go through, and then just getting all that worked out up front on the front end. That's the biggest thing about it. You need to do it as far in advance as you can.
And that's where a lot of times people will get kind of stressed out and stuff. And because there's a little bit of waiting, usually, if you're new to the game, there's usually a little bit of waiting. You'll submit all the information. It takes a minute. And sometimes you'll get things that you need to adjust. That's just kind of the nature of that's the purpose of pre-approval, is to get in there and tweak things and fix things so that you can get the house that you want, Maybe it'll be perfect the first time, and maybe like when I got bought years ago, I had to pay down a credit card. I think I had to pay down a credit card. That's just part of it, So that's part of the process. And I think that what you were talking about up front when you're trying to choose a lender, and I've got a couple of questions about that. There's going to be there's more than 2, but 2 easily identified people. There's going to be the number of people that, no matter what it is, they're going to figure that the rates is best, period. That's it. And then there's going to be those that want to be able to talk to somebody that they can trust, that they can consider as a partner in the thing. So when you're going through this process, maybe numbers isn't the bottom line, which is an odd thing to say, isn't it?
Mm-hmm.
But when you're looking at lenders, look at the whole picture. And I'm not doing this for Rodney or me or anybody else. I'm just saying the smart money considers the whole package. That's my thought.
Yeah, I'm with you there. Money's always important. Like when we sell money, we need to get somebody the best deal that we can possibly give them every single time. I mean, it's hard for me to ever say, "Oh, my service is so much better than somebody else's. You should take a higher rate." I'll never say that. But I think when it comes in is when somebody's getting something unbelievable, When I
Right.
say, that really doesn't sound like it's available out there right now. You better be very careful and things like that. Just giving them good advice and trying to make sure they don't get done bad. If somebody's offering something they can't promise or
Yes,
whatever.
sort of a bait and switch sort of thing, which
Yeah, I'll give you a good example.
advertising can seem like that. That's probably not how the company operates, but sometimes advertising seems that way.
Well, I'll give you a good example. See, so a lot of the online lenders don't, they may not have 20 something years of experience, right? So a customer called us and said, "Hey, we got this quote from online," and I was like, "Well, it looked better than ours, but when you looked at it, I was like, well, for some reason they just did not quote you mortgage insurance on this, and I don't think they're going to be able to deliver this loan without it, right? It's just a standard 95% purchase, um, and the loan officer from the internet company just missed it. They just didn't put it on there,
Oh,
probably because they're not trained or don't care, but I was like, and sure enough, they come back the next day and was like, yeah,
oops.
thank you for looking at it.
Yeah.
So, um,
Okay. So the final step?
final step: avoid any financial moves, and that is everything. What we have seen in the past that does most things. One is people start going out and buying furniture and things like that, and it really a lot of times they'll say, okay, well, I'll do the same as cash and 100% financing, and honestly it's just creating more paperwork for you than it is um, hurting most people. But don't do anything during this time. Don't open up any accounts. We send you a couple things saying that throughout the process,
Don't
because
close any
honestly,
accounts.
yeah, honestly,
Don't.
when you apply, when you sign your thing at the end, sign your closing package at the end, you're basically saying you haven't opened up any new debt between the approval process. So that's why we tell you a couple times, like,
Hmm.
don't open up anything, don't change your credit, you know don't do a lot. Now, if you have to do something, like people's comment, man, I gotta buy this car, I wanted this, whatever, and like we put it in there, and make sure they're okay with purchasing their home with whatever deal they're doing. And 9 times out of 10, it's perfect. They just, as long as we know about it, we can make it all good. So
Got it. Okay. And so there's your fast answers. If you're, it only took about 10 minutes, a little more maybe, but that's the full process for getting a loan. Now, that being said, I've got a question for you, and you may not be able to answer it. I don't know what the rules are for you guys. When people are looking at, this is a common question I get. When people are looking at loans, there's more than one place to get them for sure. But there's banks, there's mortgage brokers, there's just a ton of there's hard money, there's just a ton of places to get.
mm-hmm.
The two, the most common ones are going to be a bank like US Bank,
Mm-hmm.
and then mortgage brokers like I think that's what you guys are.
Yes.
What is the difference between banks and mortgage brokers?
Well, the big difference is a bank. A bank is usually one. It'll be a financial institution, like it'll actually have a bank, like where you can deposit and has banking functions. The biggest difference is the banks are regulated by FDIC. Okay, so the banks are under the bank regulation um, a lot more in what I would say consumer related stuff, consumer related audits and things like that, where the mortgage companies can operate identical. Like I've been at both, and like at both places, we underwrite our own loans. We underwrite each place. You underwrite your own loans. You closed them with your money, and then you sold them to the investor on the back end. like, or you sort of really, we kind of both at both places, you kind of, I honestly call it table funding, because when they sign those documents, they're signing with whatever investor we have them with, right? So you don't have to do the customer doesn't do 2 sets of paperwork or whatever.
Mm-hmm.
So we close both ways. The only difference is kind of how it's owned, but the biggest difference is how it's regulated. See, mortgage companies are regulated by the CFPB, and like our licensing and things like that are a lot more stringent. People think it's the other way. Like if you're at a bank, it's more, blah, blah, blah. But the stringent comes from where you have to pass your license and have to do continuing education and things like that if you're not associated with a bank.
And for anybody that's not familiar, the CFPB is the Consumer Finance Protection Bureau, I think.
Mm-hmm.
I think it is.
We really come from the Dodd-Frank Act from the crash in 08.
Yeah, they got a lot of sway. Those guys do.
Mm-hmm. Yes, they can. It's they have no boss, nobody's above them, and they can levy fines and all kinds of stuff. They can, they're pretty powerful.
Love you. If you're looking on, we like you, Mr. CFPB.
Yeah.
That's okay. And then are there program limitations as well?
Not really. You could do both. I mean, either, a bank can decide to portfolio them just like you could get and raise capital as a mortgage company and do that. But typically mortgage companies do not want to service these loans.
Got it. Well, so there it is for our fast answers. And if you have questions, and again, feel free to call or text or email, whatever you're comfortable with. We're here to help, but if you don't ask, we can't help you. So that's what this is all about. So moving on, I think that Rodney and I we're kind of looking through things, and as we go through our business life, sometimes headlines catch our eye. And this one we both looked at and went, "Isn't that interesting?" And the headline is mortgage rate tipping point. Homeowners say roughly 5% is the magic number to move. And we have been suggesting that would be the case for 8 months. And I think it's just best guess, but now we've got that. So tell me what you're thinking, Rodney.
Well, this article, like you said, it was pretty cool. I thought it finally put a number, I guess, on what we have discussed and couldn't ever figure out. But I guess since they've done a poll, it gives them the authority to put that 5.5% out there. But we've known. I mean, some of the things that struck me about the article is, one, Fed's raised the rates 11 times since 3 of 22. So that's quite significant. We've hit the highest rates that we've had in 22 years.
That's 7.5 something.
Yeah.
7.5.
So after, I think where people's at now and what those events have caused, the rates, and then they mentioned the golden handcuffs in this article as well. Like 82% of the homeowners feel locked in by their existing low rate. So I guess they're interviewing them and saying, right, if all that's has caused this issue, right? The golden handcuffs or however you want to term it.
And the golden handcuffs makes total sense to me, because from a financial perspective, if I'm a homeowner and I don't have to move, if it isn't a required event,
Right.
I'm going to lobby against it because, you know, if I've got a mortgage of 2.5, 3.5%, the last thing I want to do, and we've been saying this, everybody's been saying it for months, is to jump into something that's 7% or 6 or whatever. And who knows what has happened to people's finances over the course of COVID? There's been probably job loss or certainly money flows different, you know, over during COVID and all that. There's just so many things that have moved around. But this is what caught my attention. And this is where people are talking about, you know, woe is me, the sky has fallen, real estate's never going to recover, that kind of stuff. And you hear a lot of that going on, and rightfully so, because none of us like the unknown. None of us do. But okay, so now that number's out there, in my opinion, and they certainly didn't do it on purpose. They're just writing an article. But 5.5 seems to be what people are saying. And it's interesting that homeowners are saying, I wouldn't sell until it's 5% or a little bit above. So they're saying, I'll tolerate that. I'll sell my house if I'm only going to a 5% loan. That's closer than if somebody said, I'm waiting to 3, because that's not happening.
Right. But that's a huge amount, right? It said that thing said nearly twice the amount of people would be willing to sell their homes if it hit 5% or a little higher.
Yes.
Think about that. An immediate, I mean, 100% increase in the market what that would be, right?
And we're talking that's like floodgate category.
Yeah. And 71% of prospective home buyers who plan to purchase their next home with a mortgage said they would not accept a rate above 5.5. So I guess that's where they're like half of the people would sell if it hits 5.5, and 71% of the people would plan to purchase if it was 5.5 or below.
And that right there, and I mean, that's really a perfect phrase, a magic number, because you would see it would be amazing to see what had happened. Can you imagine? And the supply and demand, my bet, and who knows, you know, because that's what everybody's doing these days, is betting on the economy. Who knows what the hell's going on? But if something like that were to happen, all the houses start loosening up, all the buyers start loosening up, and the supply and demand basically just stays the same, but the volume increases. Could you imagine that?
Right. No, I mean, exactly. I mean, that would be, you know, that would be return to some kind of normalcy, you know,
that's exactly right.
Where, you know, where you see, like, I've seen last few people I've been dealing with have had home sale contingencies, and they've probably talking to me, and I'm like, man, I'm so glad to see home sale contingencies back. They're probably like, what is your problem? I wish I didn't have one. But I'm like, I'm really glad you do, because this is the normal market for me. You know, now, you know, everybody around the country could be different, but, you know, this is more of my market, just local buyers and sellers, if you will.
Yeah. And the last thought I have currently, because I fly around quite a bit, it's a circus in here, that what struck me as interesting is that there's a lot fewer buyers, but they're sending signals that, you know, 5.5, I don't like it, but it's okay. Mm-hmm. That's a lot. I mean, that's pretty close to twice of what it was. And people are like, I don't like it, but I would do it, you know, because there's this tipping point, and there was their phrase, the home purchases. And I'm telling you, there's a lot of in the past, there's a lot of what I call recreational home buying going on, you know. Let's move. Mm-hmm. Okay, you know.
Yeah, I mean, it's been that way for a long time. It wasn't such
Let's get a new house
today. Yeah.
I'm tired of this one. Well, that hadn't happened for a little bit here. So
right.
Angie has got a good question for us. I'm going to pop it up here. Is there a time of the month, independent from something happening in the news, where rates are typically lower? Example being the first beginning versus the end of the month, winter versus spring.
There's a million theories, political years. I mean, everything. No, it's not. It's so much like right now. Our rates are so much driven on them trying to get inflation under control. If it doesn't matter, they've been doing it for quarters now. So they did it last. They were doing it last year. They're doing, and we're going into an election year next year. They're still doing it. It just really matters what's going on in the economy. It's just it's just like a stock. I mean, it's all it is.
And I'm going to have to say that based on what I've been seeing recently, that I bet you he does bump a quarter this month.
Oh, yeah.
I'm just betting that's what he does. Now there's, oh, how cool. Rain on the roof. I love it. When it comes to the housing market, though, there's it's kind of a three-legged stool. You've got your own personal income, you've got interest rates, and then you got home prices. So if we were to apply that question to home prices versus interest rates, you bet there's times that are when prices are lower. For example, normally when we go into the winter, things slow down and prices will drop a little bit to entice buyers, that kind of a situation. This year may not be that way because prices are already coming down. I mean, they're getting pressure to come down anyway because there's fewer buyers than there have been in the past. But in the normal circumstance where winter and spring, prices prices come up with the daisies. That's what I always say, when the daisies are up, so are the prices.
Yeah.
And so you can kind of expect that. And you'll see if you zoom out and you look at that chart at the end of next year, you'll see this winter, it'll drop down. It may not be much because it's a different market, but yes, you can parlay that money savings into times of year and things like that for sure. Yes.
On prices, not necessarily rates.
On home prices is I'm specifically answering to that.
Yeah.
And that's where we get into the funny thing about real estate. And it's just, fortunately, it made sense to me early on. And I talked to Terry DeSalms, what a superstar. He's just superstar around here. Not in business anymore, but he's a close friend, still is, and the smartest guy when it comes to real estate. But the way he explained it was, when it comes to real estate, prices fluctuate and things change all the time until you find the house of your dreams. And then all bets are off. It's like it turns into this unicorn, or however they phrase that. If it's the house of your dreams and you want to buy it, you're going to have to pay for it. That's all. I mean, for God's sakes, don't tell anybody that. So it's not like at the end of the month when cops write more. I
love that. I love that right there. Yeah, that's a great one right there. Angie's on it, man. For rates is kind of the way I look at rates is just part of the economy. They're going to go where they're kind of pushed or dictated for, like if the government wants them down, they're going to do their factors to get them down. They want them up, just like they're doing that right now to keep inflation down. So, but no, it's not like the cops writing more tickets, because I actually have something on my phone that tells me to slow down at the end of the month.
You're doing 2 miles an hour over the speed limit, pal. Pull over. What date's the 31st?
She must have some cop traps around her house. I'm pretty good around here. They don't mess with us too much.
I will tell you where there's quotas that has nothing to do with prices at all is you show me an agent house where there's 50 agents all under one umbrella. There's contests going on and there's quotas, you know. Hey, Riley, you didn't hit your
Yeah.
12 house quota.
Yeah.
And those are the
That's
calls
funny.
you're getting like in the middle of the night. Hey, you want to sell your house? Oh God. Well, that was fun. I'm just going to add this one article in here. There's only 4 points to it, super quick. The 4 ways the record high mortgage rates are changing the real estate landscape. None of this is earth shattering, but here's what we've seen, and we've talked about this a couple of times. Number one, fewer buyers. There's absolute evidence of that happen. Would you agree with that, Rodney?
100%. I mean, it's kind of like those two articles go together. When you have Fed rising the interest rates, right? You've hit the all-time record high in mortgage rates. I mean, what else do you need to have to say? Well, what is the cause of that? Well, what's the cause of fewer buyers after you raise the rates 11 times and have the highest percentage rate in 22 years? People are going to exit the market. So
and buyers are pickier than ever,
right.
and they have every right to be. God bless them. You know, they're getting squeezed from all sides. I fight hard for buyers. Love sellers too. I love them. You know, but anyway, so reduced inventory. There's no doubt about that. But I was working with somebody last week. Hi, Wendy. And we were noticing there's an uptick in some inventories in some parts of town, but overall, inventory is relatively small. The third thing is difficulty selling in some markets. No question about that.
All right, I wanted to touch on this one because you've got fewer buyers, which is exactly what you'd think. Reduced inventory, exactly what you'd think. But the difficulty selling right after the words reduced inventory. Because I don't think people are having difficulty selling. I think, here's my opinion, and you're the expert here. I think the higher homes, anytime, the more, well, let me say this, the more the rate affects the payment, I think those houses are selling less frequently. Like the higher end stuff is not moving as much, and the lower end, more like a first time home buyer or least affected by this rate change. And that's why we see our median sales price come down so much as well. But the difficulty selling, I only see that if your property's way overpriced, not in good shape, or it's a $3 million house and nobody wants to get a $2 million loan on it at 7.25% or whatever it is.
Right.
So I was a little confused about the difficulty selling, just an overall topic of a comment in that, because I think there is, but it's not necessarily overall.
Well, and that's what it says in some markets. So, I mean, I think it's probably tough selling out there in San Francisco. I imagine that's what? What'd you say?
I said I didn't see that. No, I'm just
yeah, you did. You mentioned, but I mean, like San Francisco is probably pretty tough. I mean, they're having it's tough sledding out there, you know. But in my opinion, and this is where the stars align. If you've ever heard of Dave Ramsey, they call him a financial guru. I don't know what that is, but he's a financial coach, and he's a good guy. He has strong opinions. Not everybody loves him. It doesn't make him wrong. It just makes him have strong opinions. But Dave Ramsey and Terry DeSalms told me this, and I mean, those are two like North Stars. It can't have two, but they're going in the same direction. And what they said for decades was an overpriced home will sit in a hot market just like it will in a cold one. Period. There's just no argument. There just isn't. And the fact of the matter is that people, and I see it today, that sellers price emotionally, buyers buy from a factual standpoint, non-emotional. They get emotional about it, but they're coming at it from a spreadsheet mentality. I can't find the word. I can't find it. If you think of it, tell me what it is. But it's logic and emotion trying to make sense with one another. That's what it was. A seller selling a house because they remember every drop of blood and bead of sweat that it took for them to paint those kitchen floors black. They really like that, and they think that's big value in there, And a seller doesn't like it.
Yeah, or the buyer doesn't like it, right? Yeah.
That's what I meant. The buyer doesn't like it. And so a seller's going to price high because they got this emotional attachment, and the buyer's going, "What are you, nuts?" And that's what happens. And over the past couple of years, sellers, all of us have been trained to overprice on real estate because it was selling just by putting a cardboard sign in the front, period.
Right.
So if there's difficulty selling, there may be circumstances like the San Francisco thing is a good example. I think, if I'm not mistaken, is Phoenix also having trouble? I think. I didn't read. I don't know. I'm not completely up to speed on that, so don't quote me on that. But I know San Francisco is. Overpricing is what stops most sales more than anything. That's just my humble opinion.
Gotcha.
What happens? Well, keep going here, Rodney. You okay with that?
Oh yeah.
What happens when you buy a bigger property with the houses on it for kids and parents, for example? What happens when you buy a bigger property with the houses? You mean like a big piece of land with like a commune sort of affair? A family farm, maybe? Is that what you're thinking?
Communes.
Yeah.
Compounds. That's what we call them.
Compound. Well, that's got a Waco feel to it.
Yeah. You don't see it very often because it's even when, like I had a buddy that did that, and of course, you know what happened. It was
They got divorced.
Well, yeah, it was three. It was like three families. Two brothers and the parents and everybody had their own families up there. But it busted up, and it was a mess to sell and all that stuff. So,
got it. Yeah, and does it cost? So let's go back to the question: what happens when you buy a bigger property with housing on for kids? Nothing. It all sells the same. It all sells the same. If it's if you've got two houses on one piece of property, well, it'll be in the mix. It'll be accounted for, is what I'm saying. There's no volume discount on square footage, even if it's two buildings.
I think duplexes are a good value overall, though. I mean, if you want a duplex,
duplexes are. I was talking about two separate houses, like on a 2-acre lot or something. Over the years, one of the most common, was it most common? I have to go back and check my tick marks, but it's a very common thing for somebody to want to get 5 acres, and they'll say, well, here's what I really want to do. I want to put a house up and back for mom and dad because they're getting on in age. And then for me and my husband, we'll be up front. And then on the other 5 acres, maybe we'll build one for the kids, and they really want to do that, the family compound thing. Now, I've never seen it happen, ever. But we talk about it a lot,
Yeah, and the reason you don't see it happen all the time is because you can't have two properties on one one deed. You can't have two. Like, it really doesn't need to have two electric meters and things like that. We more call them accessory units if they're going to go Fannie Mae. Like you go, we call it accessory unit because it's not a full house. Right. If you were going the full house route, the first thing I would suggest is you need them totally separate. You need each house on its own plot of land.
I hope I didn't step on any toes. Don't mean to interrupt. I just want to address it. because I when I was sharing my thoughts, I didn't see this. Been thinking about finding more acreage for us and our daughter. Do they legally split the lot first? Do you combine credit scores and loans? I can handle the first part. No, you don't split the lots unless that's your intent. If you buy 3 acres and you want to split it and it's splittable relative to the regulations and zoning laws where you are, you can do that. As far as combining credit scores and stuff, Rodney.
Yes. You can, yeah, you could definitely finance it any way you want to. But the two houses, Fannie Mae is, they don't want two structures on one loan. But
Mm.
now you'll see this, you're going to see them, but a lot of times they've been sectioned off, or they gotten a permit for and call it an accessory unit instead of like a full, like a full blown house with a garage and stuff like that. So
When you're searching, you can use the phrase or the initials ADU. It's accessory dwelling unit or something like that.
yeah.
It's it's like Rodney said, it's not full blown. It's basically a shed where somebody can stay.
Yeah, and if you
That's more
got,
than that.
and we've seen some nice ones, like they're very
Yeah. I'm
nice.
not
But
saying shed like where you keep your
yeah,
mower, but
but if you see one with two houses, two full structures, they're probably not a Fannie Mae loan. It may not have any loan on it, or it could be a bank finance property or something like that.
Interesting. Yeah. Well, I never thought about that. Yeah, that would make sense.
Just
Um,
because of marketability, not everybody, Fannie wants something they can turn around and sell, and something with two houses on it's a unicorn versus what they're looking for.
right. Yeah. I'm telling you, and I hope I didn't step on your toes, Andrew. It's not that it's unrealistic. It's just real common, but I've just never seen anybody do it.
Mm-hmm.
And I think the reality is sometimes a little space is okay. A little distance is okay.
Yeah, and I would like to have, I would call it an accessory unit, like a one bedroom apartment or something like that with a loft in it. Like a log cabin on. Have my main house and have like a log cabin.
Yeah, like a pool house without a pool.
Yeah, exactly. Yeah, and
Yeah,
some people do them with the pool house. So yeah.
yeah, you do. Yeah, they do. How fun. Um, I think that probably covers everything. You have any other? That was fun, Rodney. This format. We're trying to get this thing, all figured out.
it's
But
we
that was
got it.
really good today. Sorry, any thoughts?
That's it, man. I'm good to go. I think they got a couple.
Yeah,
They
there we
jumped in
go. Hang on.
here.
Mother, here you go. Yep.
Yep.
With a
Yeah,
mother-in-law unit.
mother-in-law accessory unit. Yep.
Yep. And I mean, you'll see almost, not always, but most of the circumstances I see with that are where there's a basement, usually,
Hmm.
and then they'll add a kitchenette or something like that. I saw a super nice kitchenette out in the Hermitage area the other day that, boy, they really did a good job on that. They really
I've
did a
seen
good.
I've seen them build some of them. These the two units out in the tear downs they've been doing a lot in East Nashville and stuff. They've put some phenomenal accessory units on these things that are just really spectacular.
Well, once it became an acceptable thing, all of a sudden everybody was making it right.
Yeah, had some
I mean,
comps for them, because they want, was it all, there's sections of town that had them, but not everywhere.
and that's what they're doing. My nephew, whatever, lives in Santa Barbara, and they're big on those ADUs out there in California to get the density increased for people
Mm,
to, more people in density. I mean, that's
yeah.
what they're doing out there. And I don't know, it's crazy. Let's see what she's got. This could be short. That's lightning. So, aren't military units real small? They're multi.
Is that military units or
I
don't
think
know what
multi units probably.
millions? Yeah. I don't know. I don't know if that's something new that they've seen out there, like the tiny houses or something.
Yeah, I don't know. They well, that was one thing that I did read though, and well, this would be my last thought, was what the Americans are getting used to, and builders are building, are smaller houses. It's shrinkflation, smaller houses for the same dollars.
Yeah.
So where we're used to 4,500, 36 will do for the same price. Don't hold me to that, but that's the point. So crazy. Mother-in-law, right? Got it. Yes, the answer to that is my experience has been that they're pretty small.
Yeah. Some,
And
yeah.
I think, yeah. And they have a, I'm going to leave that alone. I was going to make a joke, going to leave it be. Rodney, thanks a lot. Wendy, Phil, you guys are the best. Angie, you have a lovely California day. I want to thank everybody for being with us today. Hope you like the new format. We'll keep getting better at it, but I like this one. So, Rodney, we'll see you next week.
All right. See y'all.